Hey everyone, welcome back to Corporate Decoder, the place where we dig into those fun-filled corporate filings. This time we're cracking open Mr. Car Wash's latest quarterly report. It's bound to be a squeaky clean story, or maybe a little soapy around the edges, we'll see. It looks like Mr. Car Wash just posted some impressive numbers. Profits are up, revenue is climbing, and their membership club is still growing. But let's not just take their word for it. We're going to dive in and see what's really going on. Alright, so first things first, this is a Form 10Q, which is basically a quarterly checkup for publicly traded companies like Mr. Car Wash. It gives investors a peek under the hood to see how things are running. This one covers the first 3 months of 2025. Let's cut to the chase and check out the financial statements. This is the part most people care about. Right off the bat, we see that Mr. Car Wash's net revenues, that's their total sales, hit $261.7 million. That's up from $200 at 226.7 million. That's up from 239.2,000 euros nafa. And the good news keeps coming. Their net income or profit jumped to $27 million from $16.6 million. That means they are making more money. Even their earnings per share went up from 0.55 to $0.08. It seems things are going well for Mr. Car Wash. Now let's look at where their money is going. Their biggest expense is cost of labor and chemicals, which is easy to understand. It cost them about $74.3 million to pay employees and buy soap. Then there's other store operating expenses, sounds like rent, utilities, maintenance, marketing, and stuff like that, totaling around $110 million. They had to pay $16 million in interest expense. This is something very important, as we will see shortly. Now let's check their cash flow statement to see where the money comes from and where it goes. Operating activities, the cash generated just by running the car washes brought in a solid $87.6 million. That's a big jump from the $58 million last year. However, they spent $55 million on purchases of property and equipment. Think of new car wash equipment, expanding locations, and things of that nature. So the cash is coming in, but they are quickly putting it to work by investing. Not much action on the financing side. A bit of cash came in from employees exercising stock options, $1.6 million. But they paid out $62.3 million outflow in cash. It's worth noting that despite the strong cash flow, they have less cash on hand now than at the start of the year, $39.3 versus $67.6 million. This is due to their investments. Digging into the balance sheet, which is like a snapshot of what the company owns and owes. Cash is down, good to remember. Inventories are stable. On the liability side, they owe less short-term money, $193.6 million compared to $187 million. But long-term debt still remains really high, $854 million, something to watch. Because of the profit that they did, the retained earnings went up a good amount. Moving on, let's peek at some of the other details in this report. The nature of business section basically reminds us that Mr. Car Wash is all about conveyorized car wash services. They've got those express exterior washes plus interior cleaning at some spots. It also shows how many car washes the company operates. The summary of significant accounting policies section gets into how they do all their accounting, but in a nutshell, all the accounting estimates seems to be fair and standard. The report has information of the accounts receivable. These are the payments owed to the company. They are in good shape. They list what kind of receivables they have, such as payroll, tax, and construction. This is mostly bookkeeping things for anyone to care. Next is prepaid expenses and other current assets, which shows a few random numbers. They are not significant at all. Inventory net, which is the chemical washing solutions they have on hand, is pretty insignificant, less than $6 million. Revenue recognition is mostly standard stuff about when they count sales. They know that some sales are from single-time washes versus others are for the subscription model, where they recognize revenue over time. Earnings per share that are calculated and shown in the P&L table at the beginning. They also made a note about the employee retention credit. They mentioned that they qualified to receive $4.7 million in credit. They point out new accounting rules, none of which seem to cause concerns or changes. It also lists the property and equipment net, which is their owned assets, most being land and buildings. Other intangible assets net. Here we see the brand value and relationships after amortization, value depreciation. Accrued payroll and related expenses, which has to do with wages they still need to pay. Debt, it's a big number. We know from the P&L already it's over 800 million. Fair value measurements is also pretty boilerplate. Leases. They explain what kind of leases they have, finance, owned after lease, or operational rent. Not particularly insightful. Now, finally, the last part that people care about, the stockholders' equity, which is good to know the health of the company, how much they own and such. Legal proceedings, all is normal. And finally, there are just the boring signatures, Kenneth. So, what's our verdict on Mr. Car Wash's latest report? Well, at first glance, things look pretty good. The company's growing, profits are up. However, if we stop and dig a bit, we see some concerning issues as the cash is lower than we would like and debt is still sky high. Their membership program seems to be working, but they will eventually saturate the membership program market share, and then they will need to find more places to increase the cash flow if the debt number will continue to be this high. But with that said, there's no indication that things are falling apart, so there is no obvious reason to think the ship is going to sink. Thanks for tuning in to Corporate Decoder. If you like this deep dive, don't forget to hit that like button, leave a comment, and subscribe for more financial filing fun. See you next time.